Welcome, curious minds, to another deep dive. Today, we're tackling a question that probably crosses the mind of anyone thinking about their future, especially if you've been watching the digital asset space. How much Bitcoin might you actually need to retire?
Yeah, it's a big one.
It sounds almost too good to be true, doesn't it? Our deep dive today is based on some, well, pretty fascinating new research and models. It offers a fresh and, frankly, quite audacious perspective.
hmm
We're drawing insights from a recent article by Martin Young, which talks about these new findings and predictive tools. Okay, let's unpack this intriguing idea that less than one Bitcoin could actually be enough for retirement.
Right. And what's truly fascinating here, I think, is how this research takes a really complex financial question,
Hmm.
the kind that usually involves tons of spreadsheets, traditional assets, and instead models it based on specific economic indicators and these predictive tools focusing specifically on a digital asset. So our mission in this deep dive is basically to break down the calculations, the assumptions behind this pretty bold claim. We want to offer you clear, digestible insights into what it all means and maybe why it might be relevant to your own long-term financial thinking.
Okay, let's dive right in then. The central figure behind these projections is a well-known Bitcoin researcher and investor, Smitty, also known as Sminston With.
Right, Smitty.
And Smitty's actually created a really detailed, sort of comprehensive model to calculate precisely how much Bitcoin someone might need for retirement. He uses a bunch of different factors. And he makes a pretty bold statement. He asserts that, quote, most people in most countries still need less than 1 BTC for 2035 retirement.
Wow, that is bold.
It's a powerful claim, isn't it?
Right.
Especially when you contrast it with what the research says about retiring now.
Mm.
If you were to retire, say, this year, 2025, the same research indicates most countries would actually require somewhere between 1 and 10 whole Bitcoins. Quite a difference.
A huge difference. And that range, 1 to 10 Bitcoins right now, it really highlights the immediate variability, right? Based on a country's cost of living, average income, all that.
Sure.
But Smitty's model, it's not just a simple guess. It's built on several core components designed to, well, forecast future needs maybe a bit more accurately. It factors in each country's average income level, and crucially, it adjusts for inflation.
Okay, inflation's key here.
Absolutely. And specifically, they're noting a 7% M2 expansion year over year.
M2, remind us what that is.
Yeah, so M2 is just a broad measure of the money supply. Think cash, checking deposits, stuff that's easily convertible to cash. So projecting a consistent 7% expansion suggests, a significant ongoing increase in the amount of traditional money floating around.
Which means dollars, euros, they buy less over time.
Exactly. The purchasing power goes down. And this inflation factor is absolutely key to understanding how Bitcoin's potential appreciation could become so impactful in real terms, not just nominal dollars. The model also considers the age you plan to retire. But the most foundational part, and probably the most debated element,
Here it comes.
is Bitcoin's power law model. This is what Smitty uses for predicting future prices. And this raises a really important question for you listening. How can we possibly project something as, well, notoriously volatile as Bitcoin's so far out? And what is this power law model anyway? We'll definitely dig into that.
Yeah, we need to. But before we get into the mechanics of the power law, let's just absorb the kind of headline findings from this research. They're pretty surprising. For people looking at retiring around 2035, the numbers are genuinely eye-opening.
Mm-hmm.
The research suggests that for more than half of the 96 countries they listed, less than 1 Bitcoin would be enough for most people to retire on.
More than half the countries.
Yeah. Now, obviously, there are exceptions. More expensive places like the U.S., most of Europe, they naturally need more Bitcoin to maintain a similar lifestyle, just given the higher cost of living.
Sure, that makes sense.
But the sheer number of countries where less than 1 BTC could potentially be sufficient, that's really remarkable. It hints at a very different financial future, maybe.
And it gets even more compelling if you push the timeline out further. Look out to retirement in, say, 2045.
Okay.
The research indicates that people in nearly all countries, except for maybe a handful of what they call super wealthy places, would need less than 1 Bitcoin.
Less than 1 almost everywhere by 2045.
Yeah, and here's the really surprising bit, maybe the aha moment for some listeners.
Yeah.
In many of those countries, just zero point 0.1 Bitcoin could be enough by 2045.
0.1.
Think about that. If we connect this to the bigger picture, it really suggests a profound shift in how we might think about long-term financial planning. Instead of just focusing on, stocks, bonds, the usual retirement age, this research kind of nudges us to consider the potential of entirely new asset classes and maybe a more dynamic possibly earlier path to financial independence. It fundamentally redefines what enough retirement savings looks like, assuming.
Assuming the model hold that.
Exactly. Assuming the underlying premises, especially that power law model, hold true over these pretty long time horizons.
Okay, that is a massive claim. And like you said, it all hinges on this power law model. So for our listener who might be thinking, okay, what is this thing? Let's break it down. This is where it gets really interesting, right? Because the whole idea of needing less than one Bitcoin relies completely on this specific projection continuing to be accurate.
Precisely.
So Smitty's research assumes Bitcoin prices will keep going up according to this model. What does that actually mean? How's it calculated?
Okay, so the power law model. It's derived by looking at historical resistance and support bands of Bitcoin's price.
Resistance and support, like price ceilings and floors.
Kind of, yeah. Resistance is where price rallies tend to stall. Support is where declines often find a bottom. But the model basically uses a statistical method, linear regression on Bitcoin's historical price data. Now, to make that less technical, imagine plotting Bitcoin's price, but not on a standard chart. Use one where each big jump, like from $1 to $10, then $10 to $100, takes up the same vertical space. That's a logarithmic scale.
Okay, log scale. Got it.
When you plot Bitcoin's entire price history that way, right from the beginning, a remarkably consistent sort of straight line tends to emerge through all the noise.
Oh, okay.
That's the power law. It suggests this predictable long-term path of exponential growth, even with all the famous short-term ups and downs.
So it smooths out the volatility in a way over the long term.
Exactly. And based on this model, the projections are, well, pretty astounding. By 2035, the model actually values Bitcoin at $1.7 million.
1.7 million per Bitcoin.
Yep. And according to Smitty, that projected value is, quote, more than enough to retire on for most people. Now, this model gives a compelling framework, right, for thinking about potential future value. But, and this is important for you listening, you have to consider the assumptions. Primarily, it assumes that past performance, even on this log scale, will continue to predict future performance.
Which is never guaranteed in investing.
Never. It's a powerful tool for thinking about possibilities, but it's definitely not a crystal ball.
Right. So if that's what Bitcoin could potentially be worth according to this model, it makes you think about its current rarity, doesn't it?
Yeah.
We're talking about a future where even tiny fractions could be life-changing, but right now, actually holding one full Bitcoin being a whole coiner is incredibly rare.
It really is.
The estimated number of unique individuals who own one whole Bitcoin is only around 800,000 to maybe 850,000.
That's globally.
Globally. With 8 billion people on the planet, whole coiners are like 0.01% to 0.02% of the population. It's tiny. And get this comparison. People holding one BTC are even rarer than the estimated 16 million millionaires worldwide.
Wow, rarer than millionaires. That puts it in perspective.
Doesn't it? Especially when you think about that potential future value we were just discussing.
It absolutely does. And it's important to clarify the data here, like from Glassnode. They report on addresses holding Bitcoin. And yes, addresses with a balance over one Bitcoin have stayed above 1 million for the last year or so.
Okay, so over 1 million addresses.
But those addresses include exchanges, big funds, institutional whales, those really large holders.
Right, not just individual people.
Exactly. So the actual number of individual humans holding one Bitcoin is much lower than that million address figure suggests, probably closer to that 800K number. And this extreme rarity, combined with Smitty's projections that even fractions could be so valuable, it really underscores the potential here. It highlights the current distribution and maybe the future value proposition of even small amounts if those long-term price projections driven by the power law model turn out to be right.
Yeah.
It's why this idea of less than one Bitcoin for retirement isn't just like a wild dream. It's a model-driven possibility that kind of redefines scarcity for the digital age.
And that idea, that a small fraction could potentially make a really big difference down the line. It often sparks the question, okay, how do I even start exploring this?
Oh.
So for those of you listening who might be curious, maybe wanting to dip your toes in, we've got a helpful resource. If you're not already set up on a major exchange, now could be a good time to check things out. You can register today and actually get a 10% discount on spot and futures commissions on the BingX exchange.
Oh, nice offer.
Yeah, all the links you need are right there in the description of this deep dive. And while you're there, be sure to subscribe to our Telegram channel too for more insights and updates. Okay, so bringing it all together.
Wow.
The core message from this research really is the potential for even, well, surprisingly small amounts of Bitcoin to be transformative in the long run. according to this specific modeling, of course.
Right. Always with that caveat.
For you, the learner, maybe this research offers a kind of shortcut, a way to understand a potentially massive financial shift that could be happening. It's about looking beyond just the day-to-day price swings and considering what the future might hold if these models have some validity. We're not giving financial advice here, obviously,
No, definitely not.
but just equipping you with the context to think about these big potential shifts.
Yeah, and this is where those aha moments can happen, right? This deep dive offers a really compelling long-term outlook, particularly driven by that power law model and its projections. But it also raises an important question for you listening. How do models like this help shape your own long-term thinking about financial independence, about these evolving asset classes? It sort of encourages you to think critically about, traditional portfolio diversification, the role new digital assets might play, and what true financial independence might even look like in a world that's changing so fast. It's really an invitation to consider different possibilities for building wealth, maybe beyond the traditional paths, and to ask yourself, what does enough really mean for your future?
Good questions. So,
Yeah.
to sum it all up then, this research suggests that yes, surprisingly small amounts of Bitcoin could potentially be enough for future retirement, but depends heavily on where you are in the world and crucially on the validity of that power law model holding up over time. It's a fascinating glimpse, though, into one possible future.
Absolutely. And as you reflect on all this, maybe consider how these long-term projections really challenge our traditional ideas about wealth and retirement. What does it mean for the future of financial planning if a single digital asset could potentially hold such significant long-term value, even in tiny fractions?
Right.
It kind of opens up a whole new paradigm for how we might think about building and preserving wealth, maybe even across generations.
It's definitely a lot to ponder. Well, thank you for joining us on this deep dive.
Been great chatting about it.
If you found this deep dive valuable, please make sure to subscribe, hit that like button, and definitely click the notification bell so you don't miss any of our future explorations into fascinating topics just like this one.